Big banks are in big trouble. In today's video, I'm going to show you one of the biggest companies in the world affected by what we're seeing today. You are aware of the dangers of the banking system, the financial crisis, but now we've got something interesting to discuss, and I'm going to show you how this is all connected. A lot of dot connecting today. My name is David Quinteri, and what I do here at this channel is I take all that complex information, make it real simple for anybody to understand, and then at the end, we connect that in with what you personally need to do as a result of all this information. Let's begin by looking at the banks in hot water. Well, check this out. You probably saw this. Fitch warns it may be forced to downgrade dozens of banks, including JPMorgan Chase. They've got some problems, a lot of problems, in fact. And remember, it's not just the small banks, not just the regional banks, but we are seeing it throughout. We've got some serious issues. We could look at this. Shares of U.S. banks drop after the S&P downgrades some ratings. Moody's cuts ratings of 10 U.S. banks and puts some big names on downgrade watch. Oh, that's right. Now, this is from a few days prior, but I'm just trying to show you. Getting to the big news here, though. Look, projected commercial real estate loan losses for 2023 under the Fed's severely adverse stress test scenarios. 23 banks, this is the percentage of average loan balances, and you will see at the top of the list, Goldman Sachs. Okay? So in an adverse scenario, a scenario in which bad things happen, this is the result. Goldman Sachs is going to lose big time. Commercial real estate exposure, apparently far too high. This is one of the biggest companies in the world. They are connected to every government, it seems, when you look around. Looking at next on the list, Morgan Stanley. What else do we got in here? Some other names. RBC is even in here. Wells Fargo's in here. The usual names that you may be used to. But it doesn't stop there. Projected credit card loan losses for 2023 under the Fed's severely adverse stress test scenario. Same deal. Guess who's on top of the list? It's Goldman Sachs. Yes, that's right. Pretty interesting that they ended up on top of that. Credit card exposure as well as commercial real estate. They are a big bank, obviously. They've got a lot of exposure. They've got a lot of assets and liabilities. And certainly, they are in big trouble in the event of an adverse event. Is that going to happen? Are we going to see problems with the banking system? Well, what have the banks been doing recently? They've been doing what's called loan loss provisions. That's when you take money and you put it aside. You know your rainy day fund? It's exactly the same. All of the big banks are doing that. They say they're doing that. And why do they do this? It's because they want to make sure for the Federal Reserve and, of course, for the government to say, look, we're doing what we need to by putting cash aside. We've got reserves. We've got this for safekeeping. And they only do that when difficult times are upon us. They also did it in 2020, okay? But they're doing it again. And in 2020, if it wasn't for all those moratoriums, it would have been catastrophic. Think about this. It's been 3 years, and there have been no student loans being paid. People aren't paying their bills. And they're basically saying, hey, why would I pay? If I don't have to pay, why would I pay? And now that's coming back, and now you're going to see the effects of this. It's not going to be, devastating day one necessarily, but it's enough of a payment that it will squeeze people and have an impact on the wider economy. Okay, and I do believe also some of them aren't going to be able to pay, number one, but if they are paying up their student loans, maybe that means they're not going to be paying up other debt, and we start to see the defaults, the bankruptcies continue to escalate. We have some issues here, some odd things happening. A U.S. bank is denying access to funds and freezing accounts, leaving customers in dire financial straits. Here it is. This is just one bank, by the way, but it's Green Dot Bank, which offers banking and debit card services to people who shop at Walmart. All right, giving people the runaround. Wells Fargo, missing deposit glitch, alarms customers. Oh, the bank said it was a technical issue. I don't want to say it's funny, but this is what the bank does. It happens. There's been instances people go to check their balance. Oh, I have zero in my bank. That's what we're doing. We're taking our hard-earned savings, we're giving it to an institution, and we hope that everything ends up okay. I worked for the financial companies. I saw with my own eyes where a job would be running over the weekend, and you come back in on the Monday and you find out in the very morning, by the way, when that thing ran, it screwed up all of these balances, and now people's accounts are suddenly screwed. This is unbelievable. Now you got the wizards and the gurus there, they're going to work their magic, but understand that you're basically just giving up everything in hopes that they're going to make it all okay. They're going to, invest your money properly. I've seen some crazy things. I've seen some of the high net worth wealth management that you wouldn't believe the issues that these people have. There's some strange people out there managing a lot of money. And it's truly crazy. Seen it with my own eyes. Remember that. Look, China needs its own Lehman moment right now. Can you believe this? Well, what they are saying in here is they've got their own banking system problems. They need to basically shed all of that. They need to get rid of it right now. You can argue this and so on, but I just think it's interesting to look at it. They want to get rid of that. Stop the pretending, get rid of this. It's something that nobody knows what's going to happen, but in the next little while, you've got a big issue. Imagine the double whammy of property wobbles and fiscal woes. China's banking system owes the equivalent of $13 trillion of local government debt, or 29% of total assets, according to Goldman Sachs. Funny enough. On top of that, there's about 58 trillion yuan exposure to the real estate sector. How can China's Lehman moment not be here already? And what they are doing is essentially taking this and spreading it out as much as possible, trying to utilize the local financing, government financing vehicles, like these new entities that have trillions upon trillions of dollars worth total. And they're trying to spread that out and restructure the debt. It doesn't fix anything. All it does is spook foreign investors. Maybe investors within China might say, hey, this is a good opportunity, or the government forces the banks to buy it as part of a good opportunity. It's not a good thing. Remember this. There is a lot of chaos going on right now today. If you read this, I think it's funny, but there's a quote that says, the debt is manageable. And I've heard that over and over and over again over the years. Those in the financial industry and speculators and so on. It's not exactly manageable. What they're suggesting here, you can read it, but the point is the United States has enough growth to make sure that the debt that they have is still okay. I don't know of a circumstance where having excessive amount of debt has ever been good. If you look back in the pages of history, the biggest empires of the world, at some point, that becomes a big burden for them. It didn't happen overnight. Sometimes it happens with a big war. Sometimes it's, devastating loss for some reason. And this is always going to be an issue. Debt is an issue, especially when those interest rates are reasonably high. That's what we are at now. That's why you could see them calling for those rate cuts sooner rather than later. The money right now, I need to tell you, the money is going into growth. It's not going into as much as it should historically into bonds. There is money going to bonds, but right now a lot of it is going into growth, particularly basically since the beginning of the year. It has been quite extreme. Look at Nvidia's stock. They use the word AI like 347 million times on their most recent meeting that they had to, earnings call. So, they know what's up. They know how to make their valuation real good. And then they do a stock buyback, because when they do that, they can kind of, the executives can pull their money out, and they're going to do very well for themselves. All right. Looking at this, I just want to show you the fact that when you compare the dividend yield of the stock market, it is quite low compared to what's going on with bonds. And so what companies are doing at this time is they're not interested in giving dividends. They're interested in stock buybacks. The buybacks benefit those, the top, the director level people that are at these companies. Okay, they're going to have these shares, and they're going to have them basically execute these sales when they hit certain price points, and they know that, and that's what they do. Okay, but I got to tell you something. Where's the money coming from in the stock market? Can you believe this? Look, this is the foreign cross-border net purchases or net sales of U.S. equities. June saw record net positive inflows. Unbelievable, right? We haven't seen this before. This goes all the way back to 2002. The most money coming from outside into U.S. equities ever right now. So you see, maybe China's not looking very attractive. That means more money in the U.S. Other countries around the world, maybe not so attractive. U.S. equities, U.S. bonds. The U.S. is being flush with cash right now from all around the world. So know that. As an investor, you got to know that, but just an individual, just to be aware of it all. Even despite this being the most anticipated recession ever, it doesn't have an impact, because the whole world is basically feeling it. So where do you put your money? And that's why people are saying, you know what, forget it, I don't care. But ultimately, people, they're not able to benefit from this. A lot of people. Look, a typical teacher can afford just 12% of homes for sale near their school. It just shows you, teacher, average job, they want to buy average home. Only 12% of the people can do that. If you don't see a problem with that, I just don't know. I really just don't know. That's the world we live in today. And so you got to ask yourself, what are you going to do about it? Well, I wrote down some points that I wanted to make. Just looking at this, you got to watch your exposure to the banks with capital. Look, think about this. With your capital, where you've got this, are you going to keep it in one bank, or are you going to spread that? Are you going to make sure that you've got something, like, just in case, a plan B? These banks, who knows what they're going to do? Suddenly a glitch just leaves you without access. Tech and AI are getting too much attention. Yes, I understand. Tech, AI, the future. Yes. But when there's too much attention, it starts to get real shaky. So watch out. Just be careful. That's what I'm saying to you. And you got to trade short term, but you got to invest long term. It's a very different mentality. People apply that, the same way. They don't know the difference, but we've got to pay attention to that. Yeah, we could say, I think Nvidia stock is going to go up, it's going to double from here. Okay, fine. But, when you're investing, you got to think about it. Okay, well, what about in the next 6 months? What about in the next 6 years? Well, I'm going to invest very differently into different stocks with my money, because this is going to be something. Is it just, me speculating, trying to get that little bit right now? Or am I going to put it here, park it here for the long term, get that long-term growth, and stick with it? This is a very different world. Understand your goals, not just your personal goals like we do with the mentorship group, but you got to understand your goals as an investor. You can speculate, that's fine, but you got to split that up. Very important. You can't get that mixed up. I know a lot of these YouTubers and stuff, they don't care. They don't care about your money, but I do. All right. Comment of the day. Here it is from Mr. Anglo Ninja. Thank you very much for your comment. My favorite item to track has been asparagus prices here in Stockholm, Sweden, where I live. In season, April, May, saw it as low as $3 US. The other week, the same store was trying to sell a 250 gram bunch for $8 USD. Who is buying that in my lowly working class neighborhood? I even took a picture. I thought it was so crazy. And that's interesting. I do something similar too, just comparing simple prices and thinking to myself, I could have sworn that was way less expensive before. I do the same thing with services and not just products. And you see that one product tracked over a period of time and how wild things become. Yes, there could be shortages, there could be, some problem that exists, but over time, the inflation level is not going to keep up. We know that. So I'm going to thank you for this, for those comments. Please, everybody, let me know of your comments all the time. I'm interested to not only reply to them, but to share them as well. If you want to get a hold of me directly, the best place to do that is Discord. It also gives you tons of tips, tons of cool stuff on Discord. Tips on self-sufficiency right here, as you can see, lots of stuff. So you go in, and on the left-hand side, it's free, by the way, link in the description. You see that. You can look at this and basically get on the left-hand side all different kinds of stuff. I want to see you there so that we can communicate. Over 1,100 people are inside there right now. Click that link in the description, and don't forget to hit that thumbs up on the way out. I'll see you later. Take care.